Welcome. Your 1 hour segment to get you set up for the rest of your life. Just kidding, but also not because we were just joking aside at some of them. That's the first one I'm going to pull up. I was just mentioning here on the very first stream we did together. I believe you said, right? Was Transmedics is the first time that was mentioned. And if you want to go ahead, what has happened since then? Share that with the fine people here today.
What a monster
TMDX,
move.
right?
Yeah, TMDX. So,
Oh my God.
Yeah, it's an absolute monster move. I called this out 3 weeks ago. This is a mini monster. I was like, it's sitting at that 200-day moving average. You see that red line right there? It was just sitting on it. Like it held it like the best way you can do it. It's just like accumulation. Like once it bounced, like even Oz said, like that's accumulation those 3 days after it hit that 200-day of like people are accumulating with the volume on TMDX. And you saw that breakout once it broke the 21-day and 50-day. I was like, all right, they're going to retest their all-time highs. They hit it. And the earnings was a massive catalyst for this name this week, where there's probably a handful of stocks that can actually produce triple-digit revenue growth while being net income profitable. That doesn't happen. TMDX, it happened for TMDX. And it's happening for
200% upside surprise. What in the hell?
It's just beginning. Like I'm telling you, this is going to hit $200 way quicker than people think. This is an absolute monster of a stock, and it rarely like these kind of best like monster stocks rarely give us an opportunity to buy. We had that 3 weeks ago at the 200-day, and you proved that it didn't want to go lower. It wanted to go higher. It was just testing that support that hasn't really tested in a long time. And there you go. It's a breakout, and who knows what the ceiling is. All I know is it went up 25-30% the day after earnings. It hasn't had a red day since. That's exactly what you want to see on a gap up post earnings. So
yeah, that's madness. I'd say 140 inbound, and then obviously you want to see a little consolidation. But what we've seen in this market with the NVDAs of the world, you just might not get it. That's what makes this market wonderful but terrifying at the same time, is that you just might not get it. So if you look at this on a simple fib retracement, which is just basically matching up buy-sell orders and extrapolating that data out, you're looking at, based on the range that it traded in, right, from this date, which is the July of 23 to October of 23, so about a 4 or 5 month time frame. 140 would be your next target, and then I would say 205 is getting a little ambitious, but it's not off the table. So, but I just wanted to mention to just kind of illustrate to you why you need to hit that. If you're on YouTube, hit that notification thing. You need to follow both our accounts. You can't be missing this. This money that should be in your pocket right now.
Here, let me share my screen too.
Okay, go for it.
Let me get out of this. Present. No. Share screen. Boom. All right.
You got it. There you go.
You can see it?
Yep.
All right. First off, before we talk SPY, because I do want to talk SPY real quick, which something just happened right now. I want you guys all to call out. So again, like what Oz was saying, like this 200-day was what we were saying. It was absolutely key. Like our first like session we had, our Friday session was, I think it was right here on April 3rd, something like that. I was like, all right, watch it move. It moved. And it was, once it broke this volume shop at 85 and retested their all-time high right here. Look at that. That's a casual 30% move after that. That's a blow off top right there. So I've been getting asked all the time, like, this is clearly a winner. Fundamentally, it's an absolute winner. Technically, it's absolutely breaking out. When can I get in? My recommendation, I do think it needs to consolidate a bit. I mean, look at this thin air. Like anything that's being bought up here, like this is like brand new territory. Wild, wild west. So the first one I'll call out is, all right, 109. Just follow the 8-day. The 8 days is a good DCA to see that. But again, this is just so like their 200 days now 50% less of what they're where they're at right now. So it does need to consolidate a bit. But again, you never know when the winners are going to ever give us a chance to get in. But I do want to talk about SPY. Right before we got in, I was about to say I didn't want it to dip because I wanted to tell it before it actually did. But I guess it's like dipping a bit right here. I'm calling for a clear rejection for the power hour. Why am I saying that? I was like, it got rejected in the 50-day. I think it was it this week or maybe last week? I was like, it's not ready to really go bounce and like go test all-time highs. Again, look where we're at right now. We're at the 250-day again. We're getting a rejection. There's like minimal volume right now. It's happening. It doesn't look like it's ready. It's something about this like bounce, like where is the TLT right here? I'm missing the TLT. Anyway, this 50 days a massive, massive technical trigger for like, will this corrective environment kind of change to what it was before, and maybe we can get a next leg up. This 50 days massive to clear, and we got rejected before, and we're retesting it right now, but the close is going to be so important. We need to clear this. We need to be at 512 or above by the close for me to feel like, wow, what a finish. Next week might be brand new characteristics of no more corrective behavior. We could be testing all-time highs.
Yeah. I'm in a weird, I just feel like rip and run. I mean, the strength that's come back at such an odd time, given that usually you see volume thinning at this point in time, people prepping for summer, they're prepping the Hamptons, they want to pull their money out. It's just not happening. I mean, the strength you see across the board here is a little, I wouldn't say scary, but it's scary. I mean, I don't know what else to say about it. It was unanticipated by most. So I think it's just kind of got people thrown for a loop as far as what to expect. Like, everyone likes a predictable market, and we haven't had the luxury of a predictable market. So the question is, like, what do you do with that? I think.
No, I mean, you're absolutely right. And like the first 6 months of this rally since October, we called out like the only metric you really need to follow is that 21-day EMA. As soon as the market tests that, it bounced. That was the previous chapter's characteristic. What's the characteristic for this new chapter in the market? It's the 10-year treasury. Once that goes from red to green, the market just flips a switch and goes straight up. I think it was 2 days ago, or like maybe during the Powell speech, you saw the 10 years just start rising. And that happened a couple minutes before the market actually corrected itself and went down like significantly. Maybe it wasn't Powell, maybe it was 2 days ago. Something happened this week where it all of a sudden just started tanking and tanking towards the close. I think it was actually the day before FOMC. I think it was on Tuesday. But again, that's a perfect metric. You need to track the 10-year treasury, because the way I do it is ticker TLT. Once that goes green, that gives like the green light for the market to kind of continue going up. But if the market's gapping up in pre-market or like right at the open, and the bonds aren't doing anything, or TLT is like minimal, it's not barely green, that's a precursor. It's like, all right, this might be fading.
Yeah, I think too, what interests me, at least on the SPY, so let me get this back up here. Just looking at this chart, obviously we're on the weekly view here. We've talked about this level right here, that this 515 is pretty critical to hold for longer term uptrend. Now, I know this is a little bit messy, so excuse me. We've just mapped out all these. These are all the levels that SPY will abide by so long as we stay in this range, so that we can understand where to go long, short, et cetera, for the short-term trades. Now, in the long-term trade here, I think this 515 right here, you can see that this is where volume really came in sell side, and we always want to be slightly below the margin, because you don't want to be looking at like independent events and saying, well, I'm going to mark this down as this is going to continue. It's like, I want to have my own padded margin of error. So I like 513 more than I like 515 is kind of our bear metric to stare at, to figure out how much really bullish momentum we're going to have. Because if you can see here, we haven't yet eclipsed this sell side here. Look at this. That's a thick boy. There's almost no wick there, which means sellers maintained full control throughout the entirety of that week. Not good for the bulls long term. It's just not, because given the strength here, our next estimates would have been the level we've talked about, slowly climbing that 200 EMA, which is going to put us damn near between 475 and 480, which, as Shai alluded to, tons of volume. There's no way we go lower. If we do, you need to like start packing food and water and shelter and guns and ammunition. I think personally, that would be like a significant downturn for our economy as a whole. That would terrify me. But we do see strength here. So we got wick down 499. Clearly buyers did not like that, and they were willing to drive price up. And sellers weren't able to hold yet. We are not out of the woods. I think every single person that's watching this stream should mark 513 on their chart, and you should stare at it. Until you see strength above 513, I don't even think it's worth having the bullish conversation yet. That's just my 2 cents. But should we break and start having that conversation, it's also important to remember that we do have some, I guess, I don't call it long term, but at least 5 months of data to suggest that this ascending support that we saw all the way up until beginning of April is we're going to be fighting against that. Now, the beauty is with ascending support, when we trade below, it becomes our functional resistance, right? However, what makes this better for us is that if we expect upside, we have room before we're even testing that as a point of contention. So, because this move up was too much, right? And anytime you start to see the top round off, that's no good. We really just want to focus on that 513. I can't hit on that enough. Like, don't overcomplicate this, you guys. Like, if you don't want to understand like macros of how the entire that's fine. Just stare at one number and understand that number and master that one fundamental truth, which is like above 513, people want to put money in. Below 513, they either want to go short or extract money out. So like buy side above, sell side below. So that's, to me, what's going to be our point of contention. You can see we've already pushed against it on the daily and failed, right? Doesn't mean we're not going to stay there, but we have pushed against and failed. And we're trading on significantly weaker buying volume than we are on sell side. So like another thing to consider. They're playing both sides of the market. You're probably not. It's just reality. Most retail is not playing both sides adequately. So here's what they do. If they can lose a little bit on the upside to take your house on the downside, that's what they're going to do. So you need to keep that in mind when looking at this. Like before we get into the bullish optimism, 513 is number one. Mark that on your chart. And I'll write them down here. After 513, you want to see 515. And you want to see them hold, ideally on the weekly chart. If you don't get price opening and closing above those levels, I would just be very hesitant and cautious to like start rigging the bull siren thinking we're good to go.
No, I mean, I think we're in a consolidation period. So that's why
Yep.
I think the 200-day really needs to catch up. I really do think that Q2 will be a consolidation period, which is totally fine. Q3, that's when things can really move because, as everyone knows, the election, which is wild to say, it's 6 months away now.
I know.
And it's an extremely polarizing election with a lot of
Yep.
geopolitical noise around it. It's going to get volatile. So just have that in mind. Of any kind of all-time high we get, you don't really want that this quickly. Like it went down a lot, but you don't want it to go right back to all-time highs within a couple weeks because that just feels like shorts covering. There's no really a reason for it than market mechanics, and then it just doesn't really pass my personal sniff test of like it corrected itself 6 to 8% and it's going to go right up to all-time highs within a month. I don't want that. I want some consolidation period, and we'll see what happens then. But just keep in mind, like I said, like there's buyers and sellers, and right now there's some ugly weekly candles that happened 2 weeks ago, and we haven't really had the higher highs and higher lows yet. So until that happens, I'd be cautious.
Yep.
And I really do think it's a stock pickers market now. Hence the TMDX, where it's up 70% this year, or just 45% in the past 2 weeks. If you look at the winners of this earnings season, a lot of it are the laggards, the Apples, the Teslas, and the losers are the winners. That have been the case where the Microsofts, the Metas, like there's not a rotation happening, but there is kind of an alignment happening of like the laggards kind of going towards the mean, where the winners are starting to like consolidate a bit, which is totally healthy. Just have that in mind of like this next week is a massive earnings week for growth tech stocks. And look at the past 2 weeks of price action for all the winners in 2024. Almost all of them have gone down after they printed, just because they've ran up so much into the print. Expectations were sky high, and nobody's really guiding up this earnings season. If anyone like can tell, like they're just slightly beating it, they're guiding slightly up, or they're just actually not adjusting at all, and just like instead of guiding up, they're just investing in their infrastructure, AI, capex, etc. But the laggards, who are everyone's saying doomsday for Tesla, doomsday for Apple, why are they up 15 and 20%? Tesla and 10% almost in Apple. It's because the worst was just so much FUD around it that it wasn't that bad. Like Apple actually did a pretty good job on their smartphone sales, and that surprised me as well. Qualcomm, who's the best semiconductor stock to track for smartphones, they really didn't call out any weaknesses that's happening. I do think that Apple's specific issue for smartphones, after seeing Qualcomm's report, it might be a competitive risk. It might be they actually might be losing some market share in China. It's not really a smartphone issue. And if that's the case, that's fine, because next week Apple's going to have an AI event. And if you guys think that the company with the most amount of cash in the whole world, who's been leading so much of the tech past decade, won't capitalize on AI, you guys are delusional, and you're accepting the FUD and living in it. And that's
Dude, the data alone. I mean, come on.
I know.
Siri's just been sitting in your pocket, knows you better than your husband, your wife, your brother, your parent. Like, Siri knows you better than anyone. And something very interesting for Apple's chart. So I've been following this closely. If you go back to October of 2020, right? That's where we really saw this everything take off. We have this. This is exactly just FYI. We made over 2,400% on our long-term NVIDIA options trade. We took that trade off of a very similar philosophy. The 700% run from SPY in October till February, which shows a 700% swing, factored on this exact same formula. October 20 lows, trend support through. We want to see 2 to 3 consolidative touches. We got a few of them here. You go through a little farther. You've got our absolute bottom, buying Apple at 125 in 2023 is like, are you dumb? Are you dumb? Are you dumb? Dude, I took a little risk. I mean, I sold some stuff I was very confident in for more upside. I sold it because I wanted to be able to put a meaningful amount of money into Apple that I don't touch. I don't talk about. I don't do anything. My advisor is the gate. Like, I don't put much with him. I put the stuff with him that I don't trust myself with. Like, I don't want to sell it when I'm in my rational state of mind. But you get me into an impulsive situation where it's like, oh, there could be some upside, I will sell. So I put it with him so that there's a little bit of a safety latch for me. But that buy on Apple between 120, 130, I got to give credit to Lee, Mr. Stock Luck Profits. He was all about that. But here's the important thing to focus on. Here's our third touch. So I don't like angled or consolidated, I guess, like setups. Like, when I see an inverted head and shoulders, I want flat price. That's really what makes me confident, because that consolidation is what leads to the boom. That's how you get the springboard. It's not having an angled tilt like this, in my opinion. But with a stock as strong as Apple, I will consider it. So if you consider here shoulder, head, shoulder with, I guess, successive higher lows, which you could even argue you could be more confident here. This touch is, to me, this is the game changer, right? Like, to me, there's a chance, speculative. I'm not an advisor. This is not advice. I think this could be, short of a macro terrifying event, this could be one of the last times we see Apple sub 200.
Look at IBM. Look at IBM.
Bye-bye.
IBM 2003. Look at IBM 2003. This is Apple 2024. I keep telling people this. IBM was just similar kind of FUD around Apple back then. And guess what? What was the 2003 level at it?
We were trading about $70, 74
$70.
bucks. We had a low in 02 of 55.
03 IBM. If I'm definitely not old enough, I'm 30 years old only, but I did a lot of research in it. There's a lot of similarities between what people were saying about IBM back then and what Apple's right now. And Apple has a much bigger treasure chest to kind of fund their new innovation. And look at IBM's chart
too. Like, from a media branding standpoint, like, Apple has a chokehold on every single human being in America. So much so. I mean, globally, they don't have the footprint, but I would say branding globally, they do, right? It's Apple. I mean, you guys hear this. I'm sure you get the TikTok videos and all this shit. Let's take your brand to the next. But notice how everyone's just only talking about brand, right? I mean, look, you're here because you follow him, or you're here because you follow me. That's brand. It's trust. There's a lot of trust in Apple.
Yeah, 100% agree. And that was the case at IBM 2003 as well. Like, that was the enterprise king back then.
Crypto here says, agree on Apple. It just generates too much cash, and you have to look at cash. And you do. In this market, nonetheless, you have to look at cash. I mean, that's where I think big money, at least some of the Wall Street guys I've chatted with in the last month, is like, they're going, I guess it's reverting back to the more kind of Warren Buffett standard simplicity of business, clear understanding of vertical and operations, but chief among all, do they print?
Also, there's gonna be so many incredible companies that are gonna come to light in the next couple of years that Apple will just partner up with their cash. Like who I actually don't think they're gonna create something in-house on their AI or LLMs. I really do think they're just gonna
Why
partner
try
up
when
with
you can
people.
buy?
Like they can buy whatever they want. Like they just went up. They had $110 billion buyback announced this week. Stock went up 8%. They went up 150 billion in value. So essentially, it just paid back for the buyback.
Yeah,
Like
thanks, guys.
it's insane. It's just my only heartburn with Apple is just opportunity costs. I think there's better deals out there.
Yeah,
Snowflake, Tesla, but it's the safest stock out there. Apple, like
right.
it won't go down that much.
I'm with you. Like, I'm not going to buy the S&P. I'd buy Apple. To me,
100%.
it's not like it does carry more risk in that it's an individual name, but on the same token, I don't want that margin slippage you're going to get in only owning 8% of Apple if I buy the S&P versus just owning 100% of Apple. Like, I'll take the downside. Mr. Black Mamba here, Kobe Bryant returned from the dead to ask us. Still can't believe Kobe's gone, man. It still doesn't.
Oh my God. I still remember the day I found out about it. I live in
You
LA.
gotta
It
take
was,
a
it
moment
was
with
brutal
that.
in LA.
That sucks, dude. He was a different breed. Sorry, that just hit me for dude. You can't anybody that's watching that's I would say like 25 and up, you understand. You have to understand. So rest in peace. Cheers to the man. Worked harder than anybody else, kind of a dick, but that's what makes it great. People said the same thing about Michael Jordan, and they're in a class of their own. So you could argue that some of these names we talked about are the Kobe Bryant of the market. They're going to work harder. They're going to do
mentality.
more. Yeah, and they're going to come home with the championship. So we've got PayPal here, and the question was opinions on PayPal since we're down 2 points. Is it 2 points today, I would assume? We're down about, I'm trying to see here. Looks like 3.5. So look, PayPal's simple. We talked about this one too. I think PayPal is in an interesting position right now, and I think it's in an interesting range that in a buyer's market, this is a no-brainer. We're not necessarily in a buyer's market yet, but I will say this chart, I know I've covered it a shitload of times. I love this range because if you look at the explosive growth pre-COVID, important to note, pre-COVID, explosive growth. Now, granted, most prime time market conditions that have ever existed, 2012 to 2020, pretty much before COVID, it was like the single greatest decade in the stock market, I believe, ever. And the boomers got rich. So I think that this range is critical. I have $70 marked just about here and 57. Easy trade on PayPal is you sell 70, you buy 55. However, you do see buyers coming into the market. I like the volume swell here. I think it's quality, and we're starting to eat up and gobble some of that sell side, which is good. And a stock like this that IPOs and within a year or two, shoots up hundreds of percent, you need to find the floor. It had no floor. Anything, always keep in mind, I'm not a big buy IPO guy. I'm just not. There's just too much incalculable risk. That is a specialty in and of itself. So, so when we go talk with Peter Tuckman at the exchange, right? That's their folks. Trading IP, they're a different breed. It's a different animal. I would suggest to anybody who's been trading less than 10 years, honestly, tread lightly with the IPOs. It's a nightmare of a market. There is a lot you need to understand that is information that's not accessible to us as individual retail consumers. And for instance, I guarantee you that the largest class of independent large shareholders of like 5% or more on PayPal, they're in at $8 and it's IPOing at 60. So like always keep that in mind. It's not necessarily about the IPO price. It's what's the backdoor deal price that they got to understand that relative to the position you could take at $60 to understand that, okay, if they 10X their investment, you're going to see some very significant sell side. So if all the other buy shops are not going to come in and grab it, you're screwed because those guys are not late to the party. They make the party miserable so that everyone leaves and then they show up. So keep that in mind with IPOs, especially tech stuff. So anyway, this range on PayPal is interesting because explosive upside is pretty much the only story we've seen from there. I love that we're curling. We're on the monthly here. So very important to denote that we're on a very large time frame for PayPal here. To answer your question, Mr. Mamba, above $70, I love it personally. I think it's a great position trade above 70 that you could I would buy it all. I wouldn't even worry about DCA. If I'm in a DCA, I'm going to try to buy below 60. But so there's two ways to look at it. If you got the time and the patience, it's a DCA below 60, 65. I think that's a smart buy. Hard stop below 50. You're taking a $15 risk for like a $50 upside. I think that's an easy trade. But above 70 on the momentum side, I think that's the simpler trade. Personally, you buy break out of 70, you sell break below 70. So you're just taking very marginal, almost no loss. It's a net zero trade. You're either going to get that phenomenal upside with virtually no downside, but you might get bumped out of the trade. So I think it's something to consider.
Yeah, I mean, it depends on what kind of investor you are for PayPal. If you're a trader, for example, like I do love the chart right now. Like they clearly bounced off the 50-day in a week ago. They're kind of holding strong right now above the 21-day as well. It looks like it wants to go higher. And with a stock like PayPal, they've been basing in this range for almost 2 years now. However, if you're a long-term investor, I'd be a little worried. I mean, this most recent earnings that they had, I put in my notes somewhere, like their transaction volume and transactions were up. However, they lost active users. Why is that? There's just so much competition in this space. Like not just from fintech players anymore. It's from the big tech. There's like Apple Pay, Google Pay, Amazon Pay, Shopify Pay. Like what is PayPal's moat like long term? I don't know. Like I can't answer that. I know that they're trying to strategize towards SMBs. Fine, that's great. But why worth the headache when we're experiencing some revolutionary tech right now that's once in a lifetime? Why try to catch a falling knife in a fintech name of PayPal? I do think it's stupid cheap right now, but I can name 5 other fintech stocks that are also stupid cheap. That whole industry is just getting whacked in this kind of environment, and you might be in dead money for a long time. But if it breaks out of this stage 1 base that's been in, I would wait until they broke out of that stage 1 base, and then it's gonna go to 100 real quick. Like it's just gonna squeeze higher because it's really cheap right now. And once it technically breaks out that stage 1 base, which everyone's been waiting on, watch out. However, it might not get there. I don't know. Like that's the thing. Like why? I don't know many people who want to start a position in PayPal other than the reason of they haven't participated in this rally and there's been going down. That's a combination of like you're catching a falling knife, and I've witnessed so many times before of people just going lower and lower, trying to catch. Like Intel is a perfect example. Everyone bought Intel as a falling knife, and fundamentally, they didn't improve at all. Competitively, there's no additional moats for them, and people just call it falling knife because they weren't participating with the semiconductors in their rally. So like, oh, it's a good deal. Guess what? Intel's back in the 30s. Like, be cautious out there.
Yeah, I think you nailed it with the understanding that like relative valuation doesn't mean as much as it may seem. So it's cheap now compared to then, but if they haven't dramatically improved the landscape of their company and vision and forward trajectory, it doesn't matter. Like it doesn't matter. That was what it was worth then with where things were then. If competitive edge is gone now, it's now overpriced. If it was trading at the same price then, it's now even more overpriced if they haven't expanded, right? Or if they haven't built their moat to understand like what is this company about and how do they. I think they failed in the. I guess I think they could have really leveraged the crypto adoption piece and become that kind of middle ground, like intermediary that was like, okay, we're traditional transaction, but we're forward thinking too. I think they could have had a ton of assets on their balance sheet in crypto that would have made them very, very. I think that would have put them in a phenomenal refi position with all the banks when you have those kind of hard assets in terms of like currency to then get cash to grow, to acquire, to do what you have to do. But they didn't.
100%.
Look at the sell side, dude. 1, 2, 3, 4. Where are the buyers? That's massive selling, guys. That's like 5x volume selling. Where are the buyers? They're small scale buyers, which is not going to drive a market. So to be efficient our time, someone asked for Baba, and we were talking about it before we went live. Absolutely loving it. My key level here has been for a while now. It's about 81.30. It looks like we're engaging with it perfectly. Now this right here is really the creme de la creme. That's that 200-day swooping down. We clearly breached it, slapped it, I would say. Now we need to see earnings has got to print, I think, for this move to be sustained. What are your thoughts for Baba here?
I think for Baba, I think it's an election year. I do think that if Trump does gain momentum, I do think the
China.
narrative on the China stocks will get
Yeah.
whacked. And think of Alibaba again, like they're always been fundamentally cheap, like, but people don't trust like the government that they're functioning in. Like, who knows what they can do to Alibaba? Like, nobody knows. And like, again, it's the same kind of mentality of like you use this as a vehicle to trade where you see the China GDP just like destroying estimates. And you're seeing technically a lot of these Chinese names are finally breaking that 200-day, which they what Alibaba last time they tested it was September 2023. It's been a year almost of this them under it. Now they're testing it. And again, they're stupid cheap right now. And if the technicals back it up, this could run a ton.
Oh, yeah. My target's 150. If it goes, it's doubling.
It could. 100%.
Yeah.
That's the thing. It's just, again, long-term investor, like I wouldn't be in it, but short-term trader, you can make some bank off this breakout right now. Like it's not done. Too. It's just beginning, really. If it holds its 200-day, it's just beginning. I mean, let's look at the VWAP from the July high. Let's see where the volume is even on that. Oh my God, there's thin air above $80. So like that just shows
there's
like there's nothing. It could really go up higher. Yeah, 100%.
Yeah, I think it climbs. You got pretty significant selling coming in. Like this is where we hit supply 120. We're going to see some supply come in, and they're going to beat us down low if you're on the buy side, right? But you breach 120. There's look at the liquidity through here. Gap, boom, boom, like this. Dude, the upside here, if you really break this chart, let's go a little longer in the time frame here. So this is what I love here, right? So we mapped this out a while back in January 2016 through January 2017, 1 calendar year. This ripped 78 to 150, right? Pretty substantial move, but not insane. It wasn't straight up. There's a push, and look where that push ended, just below 120. Came down, more buying consisted 87, and then we ripped up, and then it went nuclear, which don't expect that personally, I don't think. But on the weekly, I think we have a clear trajectory to 120. Above that, I think 150 is easy to see. So as you can see here, these two blue lines, my expectation based on the options trade that I'm currently in for this is that we will hit 130 plus by December 2025. So that's, I think, an easy trade, because here's what's easy about this. Here's your range. It's 82 to 150. Clear and defined $10 risk, because if we break below 70, you have no idea how low this is going to go. Your best case scenario is you land at 60, but even then, I don't want to play that game. So I think below 70, it's an easy, like a buy now on the breakout over 80. You risk 10 to make 50, 5 to 1. I'm taking that trade every day of the week.
No, I love that trade.
Yeah, and counter to what we were just looking at with PayPal, it's not the sellers that are showing up to the party. Look at that. It's buyers, which is phenomenal. You want that accumulation to occur. Side note, quick unrelated update. These were dicey for a while, guys. They were dicey for a while, the NVDA put spread. I was down, I believe, 100% at one point. This got very dicey. And then today saved us. I'm going to close these out, 100% net return. This will probably fill, I don't know. I don't even know what the bid ask is. We'll see where it fills. But, yeah, this was – they expired today, so never mind. We win. Hooray. Dicey for a minute, though. I will say that. So, sorry, back to the chart here. But Baba, again, I think promising to comment on what I said. I think that, yes, trader, yes. Long-term investment, bet the farm, no. Definitely not. So, but on that note, I do want to talk about a couple of those names we've been talking about that we do think are the bet the farm names. I think people have really been enjoying the updates on Tesla and such. I want to very quickly look at a passive options income trade that I do really like right now. I'm going to pull it up. It's TSM, obviously Taiwan, semiconductor manufacturing. I'm loving this strength right here. I think we're really we're solidifying position. Pretty nice touch off these EMAs here. So I always set mine up as such, 8, 13, 34, and 200. Those have always been good to me on the weekly chart. I consider them to be my Bible. I've used this strategy for years now and has never done me wrong. You can see how it engages with each moving average to determine trend. It's a very simple strategy beginners can use. I'm liking the passive option spread here. I did post it in the Discord. Let me pull it up, and I'll ask your thoughts on it. Usually, I have my man Bull here to calculate the risk on return, because that's not my specialty. But interested in your thoughts. Do you think we hold here? What do you think? What are you thinking for TSM here in the next like month or so?
So again, it's all up to NVIDIA when they report. That's the next major catalyst. But TSM, like, they didn't have a great quarter. Their earnings, they had a slight, you see that red candle, but again, if you want to own the kings of the semiconductor ecosystem other than NVIDIA, it's TSM and ASML. So if you believe this AI revolution that we're in is in the early innings of it, this thing will never ever break below 200A, in my opinion. It's just going to consistently stay above and above, consolidate, and then go next leg up. It's just an absolute monster. It's one of those Apple stocks, but for the semiconductors. Like, TSM is an absolute Apple stock where it won't go much lower. It might not go much higher, but again, if you want exposure in the AI space without all the risk of like the super microcomputers who go down 40%, or even NVIDIA goes down 20%, AMD goes down 50%, this is a beach stock for the semiconductor space. So I give my stamp of approval of, like, I don't think it will ever break that red line that you called out down there. Honestly, it might not ever go back in the hundreds for years, under 100. Like, it might just like be consolidating and going to the next leg, which is fine. Because if you're a TSM investor or even a trader, like, you took advantage of that gap down, which is absolutely rare for a name like TSM. And look at that, it filled that gap within a week or two. Like, that just shows strength in the best of breed name, where rarely you get some kind of fire sale on a stock like this. It gets scooped up. It's a V-shaped recovery always. That's what it's going to be like for TSM.
And you can see, like, they're twins. So as I said, follow NVIDIA. Now, interesting point about NVIDIA right here. So top of trend channel, it was expanding, which was offering more downside here. That's scary. I think a lot of investors were worried, like, shit, are we going to end up at 700, which was a very real possibility at a certain point. However, I will say this. Let me put this up so everybody knows what chart this is. I will say this. Look at that recovery. You just mentioned that V-shaped recovery. Like, look at that, just swelled in, already ate up that sell side. Look at these candles like you would if I don't know, fifth grader looking at patterns, because I think that's the easiest way to understand it. Look how big this one is. Did we make a bigger green one? And the answer is almost just about. Now, I'd say, looking at price action on the whole, we immediately priced in on the week following that sell side. We opened higher, right? We didn't open lower. We opened higher. That's good. We didn't close higher, but we pretty much shadowed this entire sell side candle. That's very positive. Then you look at this week. Significant push down, hard rejection off that EMA right there, which is always good. That means that algos are not going to drive it lower. So you're really trusting human buying sentiment, which is a good thing. And then we immediately push back up, and now we've reclaimed this top psycho trend, right? Because this is above our trend channel, which means this is a new trend channel, which means it offers, again, continuation of that blue sky breakout. For those of you that don't know, blue sky breakout is we don't have a relative high. We are in price discovery mode. We have no idea where it's going to go. Not to say sky's the limit, but sky's the limit. I mean, with this one, names like this, I don't know. We've hit this like weird, I don't know. It's like Duplo blocks, man. It's like, what the fuck?
So I'm going to play devil's advocate. I don't love NVIDIA right now because they are, as a short-term trade, I'm saying long-term, they're going to be a king of so many different thematics. Like, they're going to be a monster company for decades to come. But on technical charts, first off, their 200-day EMA is at 590. So much room to hit there. But my favorite indicator of, like, oh, is that a near-term top, is when the 50-day SMA goes above the 21-day EMA. That happened for the first time on April 25th, and it hasn't recovered yet.
Yeah, so, that swoop right here.
Exactly. So generally when that happens, the 200-day gets tested. Almost, I forget the probability of it. It's significant. That, like, I want to say, like, over 2/3 chance it's going to hit. Maybe NVIDIA doesn't belong in that category, but if they do, that's a lot of room for that 200-day. And I'm cautious in it until they recover again until the 21-day goes above that 50-day. Until that happens, I'm on the sidelines. I usually trade granite shares. If you guys don't know granite shares for NVDL, that's my favorite stock to
Oh
kind of
yeah,
trade.
yeah.
NVIDIA, where it's a leverage tool. It's like 2x.
We've talked about it. We ran a campaign with them to bring awareness. All that, like when they were launching those ETF products. I think you're on that too. That was, dude. I love, because it's what's interesting about stuff like this. And I'll say this. Shut up, so you can go on about it. But I think you're spot on, because this allows you to get the same upside without the labor, like the cost intensive factor of like spending $700 on one share.
100%. 100%. Like, also, like, if I just want to play $1,000 for like a 15% move in NVIDIA, I'd rather do 30% move in NVDL and just have lower risk if I want. Like, NVDL is a great tool for trading, but for NVIDIA, like, again, I can be proven wrong, but I do think there's some market mechanics that they need to recover before they maybe hit 1,000. Who knows? But again, the market closed, and look at that. SPY's at 512. That's the exact finish we wanted. That's a good finish. But being a dead horse, what was my favorite metric of like, is that a near-term top? Is when the 50-day is above the 21-day EMA. That's what happened in SPY as well on April 19th. It hasn't recovered yet. And again, the probability it's going to hit the 200-day one time. So it's either NVIDIA or SPY. On the odds are showing that one of them will hit that 200-day.
So again, are you saying dead cat relief? Is that what you're saying here? Let's just put it on the table right now. That's what I'm hearing from you.
I think there's dead cat relief into a consolidation until the 200-day catches up to it. I don't think we're going anywhere. I don't think SPY is going to hit 530 or even 540, like 525. Like, I just truly believe there's going to be a consolidation period, and there might be some rotation going into like other stocks that have been lagging. Like, I really do think Tesla's chart looks gorgeous right now. Like, I think that's a runner specifically. Apple is another runner. I do think small caps might catch a bid after like what they broke the 200. They closed above that 50-day. It looks like it wants a higher high. I could see a consolidation in indices with a risk on like rallying like the small cap world. So that's something I could see. But again, there was some heavy destruction in the market the past 2 weeks on the technical front where we need to recover it. It's not like, sure, the price action might be back to where it was 2 weeks ago, but a lot of the technical mechanics is not recovered at all. And that makes
there's no justification for the recovery, to be honest. I don't like, economically speaking, I'm not seeing justification for this.
I think short's covering. I really do think so. I think
which is good.
It's just fine. It's fine. But again, that's what we were called out earlier. Like, I don't want to see a massive gap up, fill that gap within weeks. Like, that just shows, okay, that feels frothy because there's no justification. We still have a fuck ton of geopolitical risks that didn't go anywhere. You never know what's going to happen there. And like, earnings wasn't the best on any kind of guide up or like earnings beats. Like, it wasn't that great of an earnings season yet so far. So like, I just feel like this is a perfect recipe for consolidation. And I don't know. I wouldn't get too excited. I do think you have to be very specific about what parts of the market you're going to be exposed to. Where fintech stocks, I don't think they're going anywhere. Like, they're just interest rates being higher for longer. 1, maybe 2 cuts this year. I don't think that's good enough for their environment for fintech stocks to truly like break out that stage 1 base that they've been in for years and to finally break out. I don't think we're there yet at all.
Agreed. So we got about 15 minutes left. I mean, as always, we got to talk a little Tesla. Because I think what we're seeing right here is interesting to me and a little worrisome in the short term. I don't like that we didn't see like strong continuation in strength there. I really don't. We should have. Knowing this chart as well as I know it, that doesn't add up.
No, I mean, I agree. I wish we saw a fall there. I love that. Like, perfect example. Tesla really, really needed to close above 185. They didn't at all.
Right here.
So that makes me a little cautious. However, they did recover their 50-day, which is freaking key because that was a previous resistance for them.
Yeah, this is our first cross here that we've seen dating back to December of 23.
100%.
So that's optimism. But we covered this last week at length. I mean, we spoon fed you the buy at 140. It was spoon fed, or sorry, excuse me. Yeah, 145. Spoon fed it. Again, notice a pattern here. This is pre-COVID pivot point, right? We got this very significant confirmation back in December of 22. We just needed one more here. And I would say that we've kind of solidified this trend in terms of like knowing where our cut bait is on Tesla. And I think it's below this very bright blue line on this chart. I believe we were live the day it was like 145, literally talking about this is a buy opportunity that people will be talking about in a few years. Why didn't I? What was I thinking? And spoon fed, nailed it. High five. We crushed that. I'm very proud of that. I think dude, come on. That's phenomenal.
No, I'm stoked on it. I'm shocked that there's no continuation because like what Elon did the past week is truly revolutionary on the FSD in China. That's
Do you think they're just waiting on the vote? Do you think everyone's just hesitant around the vote?
I think so, 100%. Like there is some like even if it's a 1% chance, that 1% is catastrophic on Tesla stock if it doesn't go through. So I do think like this is the type of name where like there's gonna be FOMO involved once like all the tides turn, like it's gonna shoot up, and I rather front load it. And like Oz said, like there's a clear trend and it bounced off that. It doesn't matter what the reason is for it. It freaking bounced off it like it's done for years and years. So like I would just hold on to that and it might consolidate until this like headwind of like the vote is over with. And once that's over with, we have the 8/8 event. We have FSD technology going to China, which a lot of people I'm surprised how many people don't know that China is the biggest EV market
number one
by like a mile. Like 33% of the 33% of the world is in US and Canada. The other 33% is in China. So like you're saying that China is just like not a material big impact on the FSD technology. You're delusional. It's a game changer. And there's like maybe one or two CEOs out there that can actually just fly across the world, make a revolutionary deal with China, and then actually come
out alive.
it's wild. So again, I think you're gonna hear Tesla, like people are gonna love it at 250. They're not gonna love it at 140 or 150. Like Austin, I said, that's the psychology about investors. Yep. Fine. If you know about it, that's great because you'll take advantage of it. But like just know all the FUD, like the love will come once it's at 250 because sentiment always
350. Should I buy it? Should I buy it? Which I should buy it here, right? And it's like we're trading up against what we know is going to be a downside position to earnings. It's like then all of a sudden you're down. It's 300. You sell it, and then all of a sudden it's at 4. It's like guys, like just know that like the algos are trained to take advantage of this. All the big boys in Wall Street, they know what you're going to do before you even can think it. And they're going to set you up for failure. You have to act counter to those knee-jerk reactions. And you can only do that by having a thesis that's well-founded and then being willing to execute on said thesis when the opportunity is there. Case in point, I've told you, I'm a very impulsive, emotional person with some of this stuff, just like everyone else is. So I cut myself out of the equation. I set the buy orders and I walk away because I don't want to be in the moment having to go, oh, I got to buy it. I just set it and walk away. I know the technicals. I know the fundamentals. I set it, walk away. And even more so, look at the padding you now have. So like we're talking about, man, I wish there's more upside. Personally, I don't really give a shit. Why? Because I'm already up 20%. I'm already up 20%. Like I'm just giving away free money at this point as we come to downside. And guess what? If we hit 150 again, thanks, buy more. Because I already do regret not putting more money. I'm leveraged into it. That's how much conviction I have. I even took leverage. I'm going to pay probably $250 a month in leverage cost because I think the upside is going to be that significant.
I mean, I'm for it. I mean, if you're not an experienced investor like us, like don't do leverage.
Yeah.
When you have conviction, like I have conviction in Tesla, I'd go leverage for sure.
Yeah.
Right now, dry powder. We have 10 minutes left. Do you want to go over earnings next week? Because next week's a massive.
We got 10 minutes.
Here, let me share my screen I'll pull up the earnings.
Yeah, go for it.
All right. So if you guys are growth investors like myself, let me share my screen. Next week's a freaking massive week. So sure. All right. This is the earnings week next week. So for all you Palantir lovers and fanboys as well, fangirls as well, Monday's a massive day. So Palantir is a stock. I wish I could pull the chart up, but if you look at their stock, like this one, it can break out. Like again, they closed about their 50-day, and these past two previous earnings, they've gapped up, consolidated. Next leg gapped up, consolidated. Will this be the last earnings that this stock's gonna be below 30? Who knows? All I know is they're executing on all fronts on their AIP program, and they're only pure AI play that's profitable in the world. No other pure AI play is profitable. Only Palantir is. I wouldn't be surprised if we see some kind of revenue reacceleration this quarter after seeing the AIP growth of 70% last quarter. So I think there's a couple of tailwinds for them. Palantir Catalyst is on Monday, obviously their earnings, but they qualified to be included in the S&P 500. That's going to be a massive, massive tailwind for them just because they're going to finally become not as liquid as they are. Like right now, that's a pretty volatile stock. It's a SPAC. It's not SPAC. It's not a SPAC, but it's still a volatile stock. Like you want the institutional support for Palantir to stabilize it more. So that's Palantir on Monday. Axon is one of my best of breed software stocks that I just, if you know that stock. Like it's an incredible company. They handle all the cameras on the cops, like the whole nationwide, and they're expanding globally. But they're not a hardware player. They have a cloud element where you access the Axon cloud. So all the video that's stored on like the cops uniforms, like it's stored into the cloud. And again, there's no competition in the space. And do you think the funding is going to stop for proof of videos on cops in the future? No, it's probably going to get doubled down. Like they want everything to be recorded now going forward, and Axon will capitalize off that. So I've been waiting for some kind of dip on Axon to start getting exposure to that name because I think this is an absolute monster of a company. Lucid is a dog. I think they're honestly Lucid. I would never invest in them. I think it's inevitable. They're going to go private by the Saudi names. Like they're not there. They have no choice. So I think that's going to be a massacre. Hims and her, like the CEO is a freaking idiot. I don't know if you heard about this, Oz, but he's like posting about pro Hamas this week and is angering a lot of shareholders. And dude, like you have a huge retail following for investors. Like that's not the move to do.
Well, I take any political stance.
Yeah, don't take any. It's not your job. Your job's CEO.
Stop having a political opinion. Go on your own Twitter if you are that inclined. It doesn't matter what side of the aisle or what. I don't give a shit. Oh my god,
it's just stupid.
Know,
it's stupid. No, I mean it's frustrating. But again, they're dipping like 20%, I think, since those tweets. So that's a pretty big earnings for them. Rocket Lab, if you guys know, this is my other mini monster in small cap world where like Transmedics, TMDX was my #1 top dog. This is the Robin to my Batman in my small cap world. This name, it's just in an early innings of a space economy industry that's just beginning. That's, in my opinion, after AI, it's quantum computing, and space is right after that. So like that just shows like this is like years and years away from actually being a reality. However, there's only two main players in this space. It's SpaceX, as everyone knows, worth like right now, and then there's Rocket Lab, who's the second player, who's worth less than $2 billion. And Rocket Lab has a ton of advantages that SpaceX doesn't have. Like they have New Zealand partnership in the government, launches internationally in New Zealand, not just NASA domestically. They're actually making money. Like they actually produce millions of dollars a year. Like they're fundamentally, it's not that bad. Profitability is just around the corner. Like I think this is a steal under $4, and I'm going to keep adding my DCA plan, but they report on Monday. Going at this Rivian, a lot of people got fooled with Rivian this week where, I don't know, Oz, if you heard, but they got like this millions of dollars, like $800 million of like tax credits from one state in America. I forgot which state. This caused the Rivian stock to go up 10%. this is why I'm so frustrated. People just read the headlines and bought the stock. If you click on the article and read, it's over 30 years. It's $800 million.
Yeah,
That's like essentially a nothing
amortized.
burger.
It's crazy.
So like, okay,
Yeah.
so great. Jokes on you guys for buying this. Like, I don't know what I did today, but like, I would fade that bump just because it's immaterial. That $20 to $30 million a
They're
year.
like, I don't know the full disclosure. Like I heard this from a third party who is basically managing the construction contracts of their production facilities. They're about to be spending a ton of money, which is like, I guess maybe good long term, but like your 3 to 5 year outlook, like bad, just bad.
It's not the good environment for that kind of corporate.
No,
like they have to do that. It's like it's out of their control. Exactly. So again, that's dead money in my opinion.
Quick
Tuesday
question. We only got a few minutes. Toast
is a winner in their space, absolute leader. However,
can't stand those. Like they're the reason. They're, I would say, key driver of inflation. Toast, DoorDash, all the payment services. Like the tipping thing. If anybody's pissed off about that, it's not even the restaurants do. I mean, they do it and they accept it, and it's them deciding it. But it's the payment processors that are pushing that because they want the additional transaction. Just FYI, so you can thank them for that.
Yeah, I mean, Toast it's the leader in their space, but like I don't love their business model.
It's just not time.
It's just not like their business
model.
If
they can expand into like an integrative business services provider outside of I think if they can build upon that to do more than just payment provision and authorization, I think then it's worth discussing because they have the relationship, because they have the customer base. Outside of that, no.
100%. Like I have a rule, a golden rule. I don't invest in companies have margins, gross margins less than 30%. Toast's business model, it will never go above 25%.
No,
that alone,
over and over, and that's it.
That's just a headwind. So yeah, we have a couple minutes left, so I can go over real quick. Celsius, monster company reporting Tuesday morning, clearly taking market share from Red Bull and Monster. If you look at the data that gets reported every month, Datadog is the first cloud usage stock to report this earnings season. It's a big one for me, specifically because
for your whole deal. This is your setup for the rest of the year.
Exactly. So like data, honestly, after you saw cloud reacceleration from AWS, Azure, even Google Cloud. Like there's no reason Datadog, Snowflake, MongoDB should underperform this earnings season. Like
just lagging.
There's no reason. So I'd be cautious of that. But going off the next ones, Uber, Shopify is reporting Wednesday morning. ARM is a very volatile stock. You guys remember 40% gap up last earnings season. Why is that? Low floats.
Dude, Ferrari's publicly traded, and it has been on a are you kidding me? How is this a thing? It has been a non-stop run since 2016.
What the hell? Again, best of breed. Ferrari is the Ferrari of their niche industry. Like, again, any kind of dip will be a V-shaped recovery. That's why you have to invest in those kind of companies, not the Affirms, the Upstarts, the Rivians, the Lucids. Like, come on. Like, it really is so simple. Like, if just invest in the best companies out there, you'll get rewarded because the market over the long run is meant to go up, and the winners will always be the best of breed stocks.
Yeah.
But we're running out of time, so I guess we can go over this Monday. I forgot we're doing a Monday session.
Yeah, we'll be here Monday. So 5 p.m. Eastern on YouTube, Twitter, we'll be everywhere. So I'd love to see you guys here. As always, it's been a pleasure. And stay blessed now. We'll see you on Monday.